I'm going to cut right to the actual reason today that metals dropped quite a bit again on Tuesday, May 8th, 2012. It was mainly due to news to slowdown in China. That's a lot to do with it. Also, the oil said there's slowdown in demand. Now, what I always find peculiar is they like. Well, this is where I talk. This is where I actually think the markets are rigged on a short-term basis, because we knew there was a slowdown in China for quite some time, and they go back and forth. They say there's a slowdown. No, there's not a slowdown. And the government puts out figures of around 8.5% GDP growth. And then HSB Bank, Hong Kong Shanghai Bank, puts out figures that are a little lower. They're probably better. And then you'll hear remarks from Mark Faber stating that the numbers coming out of China probably aren't good because they're government numbers, which that makes a lot of sense. I think they're full of garbage too, just like in the United States. Government numbers are government numbers. And I'm not getting on one of these things where, let's talk about the government and all this kind of garbage. I'm just trying to get out with reality. I noticed, though, this morning they were down more. And it's like the people just start buying up. They start buying up. They say, well, that's a buying opportunity. There's a lot of bulls in this market on the metals and the commodities and the oil. And, I do feel there's something a little fishy with this turn down right now. The timing, I was off on. I figured that the bottom for the metals would be around in April sometime. And here it's May, and it's still not bottomed out. Unfortunately, my mind is tainted in the same way all the silver bulls are. I'm very bullish on the metals. So it's very tough for me to actually think of them going down, because fundamentally, they should be very high. They should be a lot higher than they are right now. Now, I want to actually contrast that news today about the Chinese slowdown, and this is very recent figures. This just came out last week. Global manufacturing index is up, and where it's up is from China and the United States. So, you know what I'm saying? It's like a news-driven market, but news stories can be used to feather the edges of the market and kind of drive it in different directions, and it's really where you make the money. If you know the news stories that are going to come out, if you're part of the news agencies. See, this is where the markets are rigged. And right now, I don't want to play any games with leverage. The only thing I'm on some leverage with is oil. I'm just holding steady, and I'm also holding in cash too. And I'm not looking for more buying opportunities because I'm just going to wait. I'm going to wait. I think the metals are going to go up a lot this year, like I stated before. But this is actually where you might see that the markets were rigged in effect. And I say this is how it works, and I think it's an oldest game going. It's markets can be moved short term during the news stories, and it's playing a game of psychology. So just last week it looks like manufacturing's up in the United States, manufacturing's up in China, manufacturing's down in Europe. But globally, it's up, so that looks good for bullish for the commodities. And then you'll see an opposite story come in later. So that is, I think that is really, when people get, looking at what's going on in markets, how they're rigged and stuff. That's really what they'll do, more on a short term. And if you know the news before it comes out, and there's people that do, because people write it, don't they? I mean, really, you think there's people that don't know what news is going to come out beforehand? Like it just comes out of the air? There's people writing it. So they actually have inside information and they can act upon it. But, for now, like I stated, I'm not in any kind of leverage. I'm not even looking for any kind of more buying opportunities or anything like that. And I'm just holding in with the metals electronically and physically. I want to highlight something about this one article. It was actually from... it's something back from, it's actually on Seeking Alpha from Keith Springer. And he quotes Ben Bernanke, and very interesting quote. And also, I want to put this out as a side note because I know Ben Bernanke's highly educated, and a lot of people say, even like Mark Farber or Jim Rogers might say he's like so well educated that he lives in a world of his own. He doesn't understand business and that type of thing. I don't know about that so much, but one thing I found interesting that I read about Ben Bernanke, where does he have his own investments in? Annuities and fixed and variable annuities. He does not, like, contrast that with, say, Mark Farber, who has more than 25% of his money in gold, or Jim Rogers, who has gold in agriculture, things like that. You know, and also they both have Asian stocks. Contrast that with them. You know, actually, I think Ben Bernanke is not that bright in some ways. He's very bright in some ways. In other ways, he's not that bright. So, well, so he's going to continue the policy, and you know, the Federal Reserve, it could be at one point in time they're going to lose control, maybe sooner than you think, because sometimes, like I said, you know, about just stating this, prefacing this, how markets are rigged, somewhat. Like if you know news stories ahead of time, you could act upon it. Well, you know, people knew what stories were coming out today about markets being affected by, would be affected by Chinese slowdown, and you know, and they you know who's printing these stories. You know, it's not like little people. It's they're controlled by large corporations. These stories that come out. And I'm sure investors, and there's people already acting upon that and working in coordination with trading houses, so they'll start shorting the market, and they can actually drive it down a little bit further. So, and they'll make money on that, but they won't make money off of me on that because I'm not selling. You know, I think there's people that get stopped out. So that's why I don't like stops in some ways. When I pick something, I'll kind of hold it for a while till I win, and but I have to be very careful on my picks. This is Ben Bernanke's quote. It says, "While I'm encouraged by the unemployment rates drop to 8.3%, further improvement in the job market will require continuing the central bank's easy money policies." So, faster economic growth is needed to keep the unemployment rate moving lower, with the GDP growth of 2 to 2.5% good for no change in the unemployment rate long term. A further 2% growth is required to lower the rate by 1% in a year. Therefore, the Fed should be targeting 4 to 4.5% growth for several years. So look what he's trying to do. You know, all with monetary easing. And monetary policy loses its effectiveness if the Fed allows the unemployment rate to stay high for too long. So his only answer is to print more money. Hence, the Fed does not have the luxury to wait for a slowdown, especially when the economy needs a further boost. And this is just what, like, the two people I respect the most, Mark Farber and Jim Rogers, are saying. This guy's just going to keep printing more and more money. Now, considering that his Ben Bernanke's portfolio is mostly in fixed and variable annuities, I don't know. I think he is an idiot, to tell you the truth. So, you know, but you know what? Eventually, the metals are going to play out like crazy. They are, but just don't go hog wild on them, because you got to wait. You got to play the waiting game. You're going to have to play the waiting game. Actually, these silver bulls and all these people that are pump and dumpers, I call them sometimes, I think the silver is going to go way the hell over 50 this year. I think it's going to go over 60 this year. It's going to be unexpected. And I think a lot of the garbage that's going on right now is just to shake people loose, so don't get shaken loose. This guy goes on to say, he goes talking about bull markets on an average go for 39 months, and the current one is at 37. And talking about the election. See, this is where I think that silver is going to go probably really high this year, maybe more towards, you know, later, like in September and October or whatever, when it's not going to matter, like it's not going to affect other prices as much. You might see silver already taken off this summer, and into like September and October. After the election, there will be less incentive to continue to stimulate the economy. That's common sense. That's why if I get a hell of a lot of gains on silver and it's double this year, I'm probably going to sell off even a good chunk of physical. and take cash and wait for a pullback. As crazy as that sounds, like the world's going to fall apart and everything like that, I think there might be a pullback, but I'm not selling now. I mean, I'm talking if it gets up well over 60. The last 2 years of the presidential cycle, the last 2 years of a presidential cycle are normally very good, as we've witnessed, while the first 2 years are often terrible. That's always the case. They try to show the economy's doing great. Now, I think this is why the CME was going to put the margin rate increases up 35% higher, you know, because they want to bring down the commodities. And but I think there's other forces going on here that we're going to see a problem with, you know, runaway inflation here pretty soon, because what's going to happen is, like I said, there's something else bubbling up behind the scenes about them appreciating the Chinese yuan, and it is planned this year that the Chinese yuan is going to be one of the world's reserve currencies. It's going to be a world reserve currency also, besides the dollar, besides the euro, you know. And that's going to push the dollar down. That's going to push the dollar down. I think it might be kind of fast. You know, I heard Lindsey Williams say about, you know, the dollar being virtually dead by this year. I think that's correct, but you know, you can read Ben Bernanke's own words where they're talking about a 40% devaluation of the dollar this year. So I don't possibly see how the metals could be held down. I don't possibly see how that could be. That's why I think they're going to take off. They're going to take off like crazy, and they're probably going to go way the heck over 50, probably over 60, maybe over 70 something, maybe 70, low 70s, or you know, whatever. But when it gets up that high, this is where the silver pump and dumpers are going to screw people, because what they're going to do is they're going to say it's going to 100 or 90 something or whatever. I know I could be wrong about this, but I just don't, you know, I just see this pattern all the time. Once the market starts rising really fast and taking off like crazy, you know, that's where all the wild predictions come in, and that's where people get caught. And you know, a hell of a lot of people must have bought silver at $45 an ounce. I bet you there was a lot, and they're still waiting, and they're still waiting and waiting and waiting, because $45 an ounce was a buying opportunity, because it's going to 100. And you're going to hear that same garbage all over again. But like I said, I'm probably going to sell off some physical if it gets well above 60. And I'll be selling off the ETFs and all that garbage when it goes over 50. And just staying in cash. Now, as far as in the future with brokerage accounts, I personally don't trust them either. And we might be in a financial crisis a little bit further down the road. It might take a while. I don't think it's going to happen this year. But in the next few years, there might be. And we might get into some kind of situation where brokers' accounts aren't safe. So I might be out of them very soon. I mean, this year. Not talking in the weeks or the next months. But after I get some serious gains, I'll get out of it. And I think I will. But just hold on with these metals, because this game is actually a short-term movement in the metals. Now, I know they're going to probably push out some more news about, you know, Europe's having a slowdown and things are falling apart. But like I said, I think it's just a game going on right now. And they know these metals are going to go way the hell up. So they're being pushed down as much as possible, because it's the percentage gain you get. That's what really counts. Now, I wish I bought in at this time, but I didn't, because I'm too bullish at the metals. But also, I want to look at this Baltic Dry Index and review this real quickly again. You know, it still looks like it's not doing too bad. I mean, it was a hell of a lot worse here in the end of January. And, you know, so what I'm looking at also this, you know, it's continuing to rise. So I think trade is actually moving along fairly well. Maybe not as fantastic as the Chinese government's numbers are, but things aren't slowing down that much at all. And you know, we just got information out on JPM from the Global Manufacturing Index, and actually what brought this number up was not Europe. Europe brought the number down. It was China and the United States. So the trade actually is going on pretty strong. So this is basically a BS short-term story we're hearing today about Chinese slowdown. And watch, next week you might hear something different. But like I stated, I think this is a game short-term, and they're trying to shake people out. And you're going to see the metals go extremely high this year. So hang on. But what might happen after this year is then we might see problems, more problems in the economy, and the metals pull back. And that's only if they get up to about 60 something, 70 something dollars for like an ounce of silver. Then you might see them pull back pretty hard after that. So that's going to be my plan.